So hello, welcome back to a new video, and today we will talk about FOMO and a very important topic. First of all, FOMO stands for the fear of missing out, and what it means is that FOMO is a driver of our emotions. It is something that makes us take bad trades, jump into trades too early, and I will show you at a few examples how we can overcome it, how we can reduce the stress, and how we can deal with it better. So as I said, FOMO stands for the fear of missing out, and there are many ways how FOMO actually impacts our trading decisions every day. So when it comes to entries, for example, when we are fearing that the trade will take off without us, then we will enter early, we will break our rules, we will enter trades just because we hope and we guess that the price is going into a certain direction. And that is a very common problem. I think many of you relate. When we have FOMO and when we talk about exits, then what happens is that traders often exit their trades too early. They are fearing that they have to give back their profits, and then they will act on their FOMO. When we talk about trade management, then it means that traders are very inconsistent. They move their stop loss orders too soon to break even because they want to get a risk-free trade, which is not existent in trading. There's always a risk. Again, people have the fear of missing out. And when we talk about FOMO in the context of risk management, then it means that the people, they are over leveraging, they're taking positions that are too big because they want to speed up their account development, they don't want to wait so long, and they want to make a lot of money now and don't have the long-term vision. I'm sure that will sound very familiar. So I will first give you a few tips on how to deal with FOMO, and then I will dive into a few charts. So here are a few things that FOMO traders say, and I think they're a very good indication, and you can test it with yourself. Are you a FOMO trader? Is FOMO impacting your trading? So for example, many traders will say not this time. Maybe they have missed a trade previously and they could have made money, but they, for whatever reason, maybe they did not have a good structure or they just were not sure. They missed the trade, they did not make the money, and then the next time they are over anxious. They want to get in the trade earlier because they fear that the price is taking off without them, and they will just get in too early. Then another thing that maybe many FOMO traders will say is, I could have made so much money with this trade. It is when traders exit their trades too early, and then they use hindsight analysis, and it will also impact your next trading decisions. When you think that you left money on the table, the next time you will be more aggressive, and then this also results in bad trading. Another thing many FOMO traders say is, I waited so long for this trade. Then you almost have to trade. It is not quite there. You are still missing a few signals. Price has to go a little bit. It has to break that support level, break that moving average, but you don't want to wait. You don't want to miss it. And then you just jump in too early. And you know what happens, of course, always the same. We miss out because we know we should have waited. We did not wait. And that's just what we deserve. Many traders will also say, I have a feeling, ... when they think that they have a gut feeling or they think they can see what the price is going to do. It feels like price is going into a certain direction. They don't really have their signals yet, but they don't want to miss out. They just jump in and then they get what they deserve. And another thing many traders say is one time, just one time. They bet too much on one trade. Maybe they have lost a bunch of trades in the past. They get frustrated, then they over leverage, they take a position that is way, way, way too big, maybe even on a trade where they don't even have all their rules. It is a pure gambling trade. They just hope to hit a home run with this one-time trade, and then, yeah, you know what happens. Everything goes south. You dig yourself a much deeper hole, and then you have the problems. What drives FOMO? We have to analyze this as well before we can get into how to overcome it. Impatience, obviously, but impatience is on many different levels. Impatience can happen when you don't want to miss a trade or when you don't want to wait another candle. The trade is almost there, but impatience can also mean that you don't have the long-term vision. You don't see how trading will impact your life. If you are just serious about it for 5 or 10 years, you all want it now. You don't want to put in the work. You want the money, you want the fame, you want to buy the nice things, you want to quit your job, maybe travel the world, whatever it is. And this can also drive FOMO, so you really have to understand that. Make sure that you understand your expectations and make sure that your expectations are reasonable. If you are a new trader, obviously there's no real reason why you should expect to make any money. The first few years, understand that this is your apprenticeship. You have to learn the basics, you have to lay a ground foundation, you have to work on yourself, not care so much about can you double your account every few weeks or every few months. Make sure that you have your expectations in check, because if you have too high expectations, it certainly will also impact your trading decisions. A trader who has no rules is also then driven by FOMO, not really by the FOMO of an emotional side, but because he does not really understand what is a good trade, what is a bad trade. He has no real structure in his trading. He will just jump in and out of the markets, and FOMO is then really his driver, because he's really not structured. He actually does not know what he's doing. Then both a lack of confidence and overconfidence are also drivers of FOMO. If you lack confidence, because maybe you have come from a losing streak, then you really don't know, should you trust your signals anymore? Are they really good anymore? And then you jump in early, you second guess, and you just don't know what you're doing. Of course, overconfidence as well. If you have come from a winning streak, you think you are invincible, then you say you don't need your rules, you can feel what the market is doing, you just jump in because you have a feeling that the market will go up and down, and then, yeah, you know what happens. Then how do you overcome FOMO? There are a few tips, filters and rules. I will pull up a few charts in a bit, and then we will talk over a few setups and charts. I will show you exactly how to do that. Reduce screen time, very, very important. Many people believe that the longer you sit in front of your charts, the better you will be as a trader, but it is complete utter BS. You just, what happens if you sit too long in front of your charts, you stare at the price action, is that it will make you jump into trades, even though there is maybe not a real signal, but you're just getting bored. You see other markets are moving, you're not in them, then you think, okay, maybe this chart will take off soon, and that's not a good way. So reduce your screen time. What I always tell our students is that don't look at the candles in between when they form, just look at the candle close and then make your decision. It's a very, very good filter. Understand your system and your time frames, and basically it means understand the implications of your system, your time frames. Do you trade the higher time frames? Then obviously you need a little bit more patience when waiting for trades. It's very important to understand if you're on the 4 hour, the daily, then you just have to be patient. The trades will come. They can be a day, sometimes even a week or two, without any real good signals. So understand what your time frame and the choice of your time frame really tells you, and what the implications are. Then also get serious about trading. For many people, trading is just an expensive hobby where they're not really serious about it. They cannot really expect, or they should not expect, to really become a successful trader, because the way they approach their trading is just purely like an amateur. It's very gambling-like, and that is not a good way, because in the end it will also drive FOMO and other problems. So really get serious, understand that this is a long-term play for you, understand that you have time, don't expect your account to double every few weeks, and then this will also help you deal with FOMO. Develop discipline in your daily life. There's a nice tweet that I tweeted out last week where I said the way you do the small things is how you do all things, and it basically means that you have to build discipline in many different areas of your life. You cannot just expect to be a disciplined trader, but when the other things in your life are not going well, then you really have a very imbalance, and it's not the way it works. So the same mechanism, then when you are shopping, for example, you feel tempted to grab the chocolate, to grab the potato chips, but you tell yourself, no, not this time. I will just get the apple, or will just walk past the candy section. This is a great way to just have a small win, build your self-development, build your self-discipline, get some self-respect for yourself when you actually do the things that you tell yourself you should be doing. Instead of binge watching Netflix all night, you pull up a book, you study a little bit more, you journal your trades. Those are all the little things that over time they show you actually are capable of doing those things that you thought were hard. They don't really take up a lot of time. It's just overcoming this little inner voice in your head, which is always telling you what you should not be doing. Go for the easy and the pleasure instead of having the long-term, the delayed gratification. And over time, this little voice and overcoming and developing discipline and self-discipline will also help you jump and skip the bad trades you know that you should not be in, and you are more comfortable waiting for the good trades. So when it comes to actual trading decisions, there's a few good filters. And for example, in my trading, I always tell the traders and our students, you should not make mid-candle decisions. And what this means is that you always wait for a full candle close before you jump into a trade, because intraday candles or intra candles, they will often give you wrong signals. And for example, here's a nice a chart. We have the Euro-Japanese yen, the 4-hour. You can see a very nice established support. Many traders will wait for a sell-off here to the downside, but then what happens? You have something like here the recent two fake outs, where intra candle, it looks like price is already trying to break the level. At this point, you will have a very, very long red candle. Everything looks great. You don't want to miss it out. You tell yourself, okay, this is going to break. I can feel it. It looks great. And then you jump in. The market fakes you out. Next candle, the same. You get back in. You don't want to have the loss. You get back in. Maybe you scale up your position because you want to make up for the previous loss. You sell at the very low because the candle will look very, very great, very bearish. And then what happens? Next candle, boom, again goes against you. And just waiting for those fake outs, or at least just waiting for the candle to close. Yes, you will miss some trades, but on the other hand, you will also avoid a lot of noise. And regardless of whether you are a breakout trader, you trade support and resistance, you trade ranges, you use moving average, this will help you make much better decisions. We can take a look here at the Euro Swiss franc, the daily chart. I call this the widow maker. For the past few months, you can see price has been going up here steadily, and everybody was ready to short this market here. Every time we hit the resistance, we saw that price was not able to push higher. People sold it and sold it and sold it, and what happened? Price kept going up, kept going up, kept going up. Very, very common. Many people try to short too early, and then they get what they deserve. They don't want to wait until price is really making a lower low. At no time did this market ever made a lower low. But if you don't wait, if you don't have rules, if you just try to act on your gut feeling, act on what you think will happen, you can see here at no point did price make a lower low. We always kept trading higher, kept trading higher. And if you don't have filter rules, like waiting for a price to make a lower low, a higher high, if you are a trend following trader, if you don't wait for a price to cross a moving average, as we will see shortly, then you will always run into those issues. And just having those filter rules will make such a big difference. Here, another interesting market. You can see we have been going up very strongly. Then here recently we have here now this spike. Many people will say, wow, this looks like it's ready to go down. But no, it does not have to go down. What happens is that the price pushed higher. For now, the buyers were not able to hold price as high. But you can see the current candle price is going up again, so there's no real reason why you should be shorting. Everybody who's short now is acting on FOMO. They don't want to miss out, and this is another great signal and a great example. If you don't have ways to wait a little bit longer, and I always tell the people when I help students or help new traders, one little thing you can do is just wait one more candle to get in. Usually the candle where everybody feels they should get in is one candle too early. The next candle will either confirm your setup or it will destroy your setup. So really make sure you understand this. Wait one more candle, at least in the beginning. Get this rule of waiting for the candle close, and you will see a dramatic impact in your trading. It does not matter what type of trader you are. Again, if you trade support, resistance, breakouts, ranges, moving averages, it will impact your trading in many different ways. And I'm sure you will thank me later. So let's take a look at an example with a moving average. For example, here we have a downtrend, and then people, many traders who get in too early, they see here an inter-candle break of the moving average. At this point, price looks like it's ready to break the moving average again. It does not happen. Price completely reverses, continues the downtrend, but people who don't wait for a candle close, who are always driven by FOMO, who enter too early, they will jump here long in. Happens again here. Price almost broke the moving average, but then got rejected again. Is dipping back into the lows, and this is such a common theme. You will see it over and over again if you use support and resistance, supply and demand, previous highs and lows, moving average, like in this case. Just waiting a little bit longer will have such a big impact on your trading. You combine that with the other tips that I gave you: reduce charge time, work on your long-term expectations, develop self-discipline in other areas of your life. Then you can become a much more well-rounded trader, a better version of a trader, and overall you will have much better results in your trading. I am almost guaranteeing you that. So if you like this video, give me a thumbs up, leave a comment below how you battle maybe with FOMO and what helped you to overcome FOMO, and I look forward to hearing from you.